upload, no? So let me restart the recording. So this next lesson is on depreciation. And at the end of this lecture, you should be able to, number one, define depreciation and other relevant concepts. Secondly, explain the importance of calculating depreciation expenses. Thirdly, to calculate depreciation methods using various methods. First, let's just define a few key terms. Now, starting with assets. And when we say an asset, now it's any resource owned by an individual, a firm, or a country having a measurable economic value. It includes current and receivable cash, investments, and properties, no? Which includes supply, land, buildings, equipment, vehicles, jewelry, etc. Then we have two types of properties, real property and personal property. Ang pinagkaiba nito, real property is land and anything erected on or growing on it. No? So land plus buildings and other structures plus plants growing on it. No? So these are real properties. Now, with personal property naman, so these are assets not attached to land, which includes machinery, vehicles, equipment, furniture, etc. No? So it could be tangible or intangible. Examples of intangible assets would include software, patents, copyrights, franchise, and so on. And I believe you've seen this slide before from our previous discussion on book costs. No? So depreciation is the natural decrease in the value of assets through time. So say you purchase a 3 million peso vehicle today. At the end of 1 year, the value of that asset wouldn't be the same. No? It would have diminished. Let's assume 2.5 million pesos. After another year, it would have decreased further to 2 million pesos, and so on. No? So the loss in the value is what we call depreciation. It's not an actual cash flow. Bakit? Kasi hindi naman talaga, wala tayong pinagbigyan nito, bigla na lang nawala yung value na yun. Diba? So it's not an actual cash flow, but it's expense that we have to consider because it leads to a decrease in the total value of assets. No? So yun nga, sabi ko kanina, assuming that you pay 3 million pesos to purchase a car, no? At the end of that transaction, yung act mo ng pag-purchase ng car, nabawasan na ba yung total value of our assets? Yes or no? What do you think? Supposing we purchase a car, we paid 3 million for the car, for the vehicle, and as a result, we were given a car worth 3 million. Nabawasan ba yung net value of our assets? Hindi pa, di ba? Hindi pa kasi even if nabawasan tayo ng 3 million pesos na cash, we got a 3 million peso worth na vehicle. However, yun nga, because the value of the vehicle diminishes through time, unlike yung pera, no? This leads to yun yung reason kung bakit pa din natin siya i-declare as an expense, no? And this leads to a reduction in the taxable income. So what we want to do actually is to maximize the calculated depreciation cost and to have them earlier on so that we can maximize the tax reduction benefit. So these are the criteria for an asset to be depreciable. No? So used in business or held to produce income, have a determinable useful life, which is longer than a year, subject to wear and tear, and must not be inventory or consumable asset. When we say inventory or consumable asset, ito yung mga nauubos, no? Stockpiles, ganyan. Yung minerals in a minefield, ganyan. Now, determinable useful life, kaya din hindi depreciable ang land, no? Kasi infinite yung useful life niya. Now, let's define a few terms. No? Cost basis is the initial cost of acquiring an asset plus the sales tax, the transportation, and the normal cost of making an asset serviceable. No? So basically, lahat ng ginastos mo sa simula for you to purchase the asset and make that serviceable. And then we have an adjusted cost basis. By law, meron tayo mga pwedeng adjustments, legal adjustments for special assets. Second, book value. It's the worth of any depreciable property at any given year or time as shown on accounting records. Basically, what it represents is how much capital remains invested in the property. No? And that we should recover by declaring as costs in the future through accounting. All right, so that's book value. It's shown on accounting records. The market value naman is the amount that a buyer would be willing to pay to a willing seller in exchange for an asset. No? Basically, it's an approximate of the value that we receive through the sale of a property or what value is currently held by the owner of the property. No? Market value, unlike book value, is perception based. Pero market value is also a good indicator of the book value. So more or less dapat magkalapit sila. Book value is the theoretical value of an asset. Market value is the price kapag na makukuha ni seller kapag nabenta niya yung asset na yon. As mentioned, dapat more or less magkalapit yung values nila. Salvage value naman, salvage is a synonym for save, no? So what are you able to save at the end of the useful life of the project? It's basically the expected selling price when the asset can no longer be used for production. It's basically salvage value minus the disposal or the closure costs. And then useful life naman, let's define useful life. It's the estimated period that the asset could be used for production. We also call it depreciable life or recovery period. Recovery period in the sense na kasi we are trying to recover what we spent, no, to purchase the asset by declaring depreciation expenses every year throughout the useful life. It begins when the asset is installed and made ready for productive use, and it ends when the asset is removed for service or if the full cost of placing it in service is already recovered. Some examples of useful lives, no, for different kinds of properties. All right. So, and here's a summary of notations because I'll walk you through the different methods that we typically use to calculate depreciation. No? So, meron tayong mga accelerated cost recovery methods, but we'll not cover them anymore in CE22. For CE22, we'll tackle 4 depreciation methods. No, actually with a variant could be 5. Straight line method, 150% declining balance, and the double declining balance methods, and the sum of the year's digits method. In general, if you want to compute for the book value at any given year K, ang kailangan natin gawin is to get the cost basis and deduct the cumulative depreciation, no, until year K. And the book value at the end of the useful life should always be equal or should converge with the salvage value. Now, the first method that we'll learn is the straight line method. Basically, the assumption is that the amount being deducted as depreciation expense is constant through the year over the assets, through the years over the assets useful life. Ito yung mga formulas that we use. Simple lang ito, class. No? So, again, do not be intimidated by this. In computing, yung small d sub k is basically the depreciation for a given year K. If we want to compute that, kailangan natin i-calculate yung depreciable value. Ano yung pwede nating ubusin na value? That's basically the cost basis minus the salvage value. And dahil nga constant throughout the useful life yung pagbawas natin, we just need to divide that by n, which is the useful life of the asset. Also B minus SV over n. The total depreciation or the cumulative depreciation is K, which is the number of years times D sub K. And then ito yung nasa previous slide din natin, the book value at any given year K is equal to the cost basis minus the cumulative depreciation at year K. Danan muna natin lahat before we discuss examples. No? So, some of the year's digits naman, it's an accelerated depreciation method. For the depreciation calculation, we need to write the year in reverse, no? And then we need to calculate the sum of all the year's digits, no? So year in reverse, kunyari 5 years yung useful life ng asset, edi we write alongside the actual year yung reverse niya. So kunyari 5 years, so you write 5, 4, 3, 2, 1. And then the sum of the year's digits is the sum of years 1 to 5. So 1 plus 2 plus 3 plus 4 plus 5, which is 15. So the depreciation at any given year K is, for a given year K pala, hindi any given year, the depreciation for a given year K is equal to Y divided by the sum of the year's digits multiplied by the depreciable value, which is the difference between the cost basis and the salvage value, B minus SV. Now, declining balance method naman, instead of the depreciation amount being constant, sa declining balance method, what we hold constant is the rate of depreciation or the percentage of depreciation. No? For double declining balance, we compute the constant rate to be 2 over n, and for 150% declining balance, we calculate the depreciation rate to be 1.5 over n, or 150% over n. The depreciation for any given year K is equal to that rate times the book value from the preceding year. Okay? Basically yung ano natin for declining balance methods. We should note, however, that the book value for any year K during the asset's useful life cannot go lower than the salvage value. And because, as you may figure out now, no, the declining balance method do not reach a zero book value or may not reach SV kasi if you just keep on deducting a constant percentage, never mag-zero yun, di ba? And unlikely or may chance na hindi siya umabot sa salvage value. So there's a hybrid approach as possible, and we can switch to straight line method. Let's start with this example, no? And let's solve this example with or using the methods that we just learned. So bumili tayo ng vehicle worth 4.8 million, has a useful life of 5 years and an estimated salvage value of 500,000. Determine the depreciation amount, the cumulative depreciation, and the book value for every year of its useful life during or using the different depreciation methods. Okay, so this is the worked example for the straight line method. Pero let me just point out the salient points with the salient steps. No? So una, yung 4.8 million pesos is the cost basis or the initial cost. Diba? That's a given. Yung 500,000 pesos, we know that's a salvage value and that's also a given. For us to be able to get the depreciation value for every year, now we just need to subtract 500,000 from 4.8 million and divide that by the total number of years. Diba? So which is 5, no? Kaya itong 860,000 dito is just basically 4.8 million minus 500,000 divided by 5. And that's constant. All right? Note that the depreciation amount is constant because that's straight line method. This is quite straightforward, no? So basically, you will also see from the book value at year zero, bawasan natin ng 860,000. What we're left for the book value at the end of year one is 3.94 million pesos. Bawasan ulit natin another 860,000. We're left with 3.08 and so on and so forth. Until yung year 4, ang book value is 1.36 million, subtract 860,000, we're left with 500,000. And note that it automatically converges to the salvage value. So no need to worry about the analysis not converging to the salvage value. Alright, so that's for the straight line method. Isunod natin some of the years method, digits method, no? So same given, 4.8 million pesos, 500,000 pesos salvage value, and then 5 years of useful life. Now, sabi natin kanina, we should write the year in reverse, no? So at year 1, dapat pabaliktad tayo, mag-count tayo 5, 4, 3, 2, 1, such that ito yun, year 1, 5 yung small y natin, year 5, 1, and so on. The sum of the year's digits is 1 plus 2 plus 3 plus 4 plus 5, which is 15. The cost basis is 4.8 million, and the book value at year 5, which is also the salvage value, is 500,000. Sabi natin, to compute for the depreciation, we just need to deduct yung 500,000 from the 4,000 or 4.8 million, and we multiply that by y over SOYD. So for year 1, that's 5 over 15. So that's what gives us this value here, 1.433,333,033 centavos. Now, we can do the same, no? Ganun din yung gagawin natin for year 2. No? So we have 4 divided by 15 times the difference between the cost basis and the salvage value, which is 4.3 million. All right? Right? Okay, so kaya natin nakuha itong mga values on the third column. You should note, papansinin natin with the sum of the year's digits, the depreciation amounts are higher for the earlier years. No? And this is preferable for us because since these non-cash expenses are declared earlier on, mas maaga nating nakukuha yung tax savings rather than later. Now, punta tayo dun sa mga medyo challenging na parts na, no? With the double declining balance method, sabi natin, we deduct a constant percentage of the current book value. Now, that constant percentage is computed for the double declining balance. It's computed as 2 divided by n, no? And since n is equal to 5, kasi 5 years yung useful life, so R is 0.4 or 40%. So the depreciation amount is 40% of the previous year's book value. The cost basis is equal to 4.8 million. And so the depreciation for the first year is 40% of that, no? So that's 1.92 million. If we wish to calculate for the depreciation for year 2, we need to refer to the book value at year 1, 2.88 million, and we multiply that by 40%, we get 1.152 million, and so on. No? So ganun din, no? At year 4, the book value of the asset is 622,080 pesos. 40% of that is 248,832. If we deduct that from 622,000, we get 373,248 pesos. However, we have a problem with this, diba? Sabi kasi natin, the book value at any given year shouldn't go lower than the salvage value. Pero sabi natin, our salvage value is supposed to be 500,000 pesos, di ba? So what we need to do is to adjust the depreciation at year 5 such that the book value for year 5 will converge with the salvage value. So papalitan lang natin yon. So BV, book value at year 5 is now equal to 500,000. What we need to deduct from the book value from year 4 is simply 122,080 pesos. No? So we adjust. All right. So that's for the double declining balance method. Again, we should be careful in ensuring that the salvage value or the book value does not go lower than the salvage value. However, so let's try naman yung for the 150% declining balance. Ang sinasabi dito, di ba, sabi natin, same principle dito as the double declining balance, but we compute yung R or the fixed constant percentage rate as 1.5 divided by N. N is equal to 5, so that gives us R equals 30%. It tells us that the depreciation amount for every given year is 30% of the previous year's book value. So we start with the 4.8 million pesos. 30% of that is 1.44 million. So that gives us a book value for year 2 equal to 3.36 million. Ganun din, no? If we wish to calculate for the depreciation for year 5, we need to get 30% of the book value for year 4, which is 1.152 million and 480 pesos. No? The 30% of that is 345,744. However, kung papansin ninyo, we end up with a book value equal to 806,736. What does that tell us? Hindi natin naabot yung 500,000 the salvage value, medyo malayo pa. So hindi natin declare yung total na pwede natin i-declare as expenditure, depreciation expense. No? So what we can do instead is use a hybrid approach. We can shift to the straight line method kapag yun nga, para diretso mag-converge siya to the salvage value. Now, hybrid is we use a double declining balance method and then we switch to straight line method. No? So for instance, we start with 150% declining balance and then we switch to the straight line method when the calculated depreciation using the straight line method already exceeds that of the declining balance method. We calculate the depreciation using straight line by dividing the remaining depreciable amount by the remaining useful life. So ito yung example natin. So we start with a book value of 4.8 million. Tinatry natin i-calculate yung depreciation using 150% declining balance, so that gives us 1.44 million. If we go directly straight line method, that will give us 860,000 pesos. Ngayon, sabi natin, we will only switch to straight line kapag mas malaki na yung depreciation amount na binibigay ni straight line method. But for year 1, mas malaki si 1.5 declining balance, so we stick with that. No? We can do the same hanggang umabot tayo ng year 3, that seems to be the case. No? Sa year 3, ang 30% ni 2.352 million is 705,600. If we try na ubusin yan for the remaining 3 years, no, that will give us 617,333.33. So mas malaki pa rin si declining balance, no? But if you notice, pagdating ng year 4, 30% of 1.646,400 is 493,920. But if we are to depreciate this on a straight line basis over the next 3 years, it will give us 573,200 pesos. So mas malaki na yung depreciation amount using the straight line, and then we start switching to straight line method. Tapos dahil straight line na siya, dapat di ba parehas na rin yung depreciation niya next year. And then you notice that we automatically converge to 500,000 pesos, which is the salvage value. Now, quick question: which among the depreciation method do you think is best to use from the point of view of a company? Anyone, please type in the chat box. Any guess? Siyempre, yung pinakamabilis na mag depreciate, no, yung earlier years yung depreciation. Correct, sabi ni Andre. No? And if we plot the book value over time, you will notice here kung sino yung pinakamabilis mag-depreciate, which is a double declining balance. No? It may seem more difficult to calculate, but it's the fastest. And if this shows us yung mga calculated na declared depreciation expenses over the years, no, using the different approaches. And if these were to result in tax savings, gusto natin na mas mapaaga yung mga tax savings. No? So we go for the double declining balance. Now, how about other kinds of assets? For intangible assets, no, hindi kasi sila nag-wear and tear, so hindi sila depreciable. Pero pwede nating silang i-amortize, no? So yung mga intangible assets, pwede silang i-amortize as long as determinable yung useful life nila. Para ma-compute natin yon, actually parang depreciation lang naman yung ginagawa natin doon. So we just divide the total amount, no, by the number of years na useful yung intangible asset na yon. For consumable asset, definitely hindi sila na-wear and tear, and consumable nga sila, so they do not satisfy the last one. No? So what we do is we use depletion methods. No? So examples of consumable assets, yung mga inventories and stockpiles. Pero the bigger consumable assets, properties like oil fields, metal mines, and quarries. Basically, ang ginagawa naman natin dito is we need to have an estimate of the total extractable amount. Ano yung total amount na pwede nating makonsume? And then we record the amount that we extract for a given year or we consume for a given year. We get that ratio and we multiply that by the initial cost. So that's the depletion amount. Pwede rin natin ito i-declare as an expense. Okay, in light of declaring everything as declaring the total investment cost on one go. All right, so that concludes the second slide deck. No, let me quickly proceed to the third slide. Medyo mas mabilis na lang to, no. So we'll talk about after cash tax flows. And this is to aid you in setting up your analysis, no? Kung kailangan yung mag after-tax cash flows. So there are different types of cash flow elements. So it could be an investing activity, could be an operating activity, or it could be a financing activity. No, with investing activity, may cash inflow yan, may cash outflow. For instance, if you invest, papalabas yung pera, so it's a cash outflow. Yeah, if you gain, if you sell an asset, so that's a cash inflow, so that's positive. Financing activities naman, when we borrow funds, no, so that's a positive cash outflow, cash inflow, positive cash flow or cash inflow. When we already need to repay them, so that will result in negative cash flows, no? Or in the context of corporations na may mga equity financing tayo, when you release dividends to shareholders, no? So that's also cash outflow. Na-skip ko pala tong operating activities, no? Operating activities naman include revenues and cost savings, which are both cash inflows. But we also have cash outflows like manufacturing expenses, operation and maintenance expenses, and income tax, no? When we say taxes or fees or dues imposed by the government to support its activities, no? May iba-iba tayong types of taxes, yung income tax, a percentage of your income on an annual basis, so that's paid to the national government. Yung property tax, you pay for that for owning a real estate property, and you usually pay that to the local government unit. Sales tax, typically hindi mo na to kailangan bayaran sa BIR or sa local government unit. Pero included yan kapag bumili ka ng bagay-bagay, ng commodities, it's incorporated in the form of VAT or EVAT. Excise tax naman, again, included na siya dun sa cost. These are taxes exacted on luxury commodities. Kaya sila mahal kasi in addition to their actual na cost, meron pang luxury tax, which we call excise tax. Now, how do we calculate the taxable income and eventually the tax amount? No? So, taxable income is basically equal to the revenues, which includes all sources of cash inflow, minus the expenses, which includes operation and maintenance expenses, interest on loans. But please take note that we do not include capital investments as part of expenses, no? As mentioned earlier, hindi kasi siya talaga on one go kasi nga pag nilabas mo yung pera, meron ka pa rin equivalent asset of the same worth na nakuha. No? That's why ang inaano natin, ang tinitake into account natin would be the depreciation expense, D sub K. And then the income tax is equal to the tax rate times I sub K, no? Which is the taxable income. And then basically the net income is equal to the taxable income minus the income tax. No? So that's the net income. Ang pinagkaiba ng net income sa after-tax cash flow, when we calculate for the net income, we include depreciation. But if we wish to consider the after-tax cash flow, since depreciation is not a cash flow, we do not include it. But we include the investment cost instead, no? At kung kailan nag-occur yung investment cost. Ito example ng calculation, kaya magkaiba sila, no? Ayan, so for instance, we earned 50,000 pesos, tapos cost of the goods sold is 10,000, the depreciation of the equipment is 4,000. So yung 4,000 actually is the only thing that spelled the difference. Pero kailangan pa rin natin i-consider kasi we also need to consider taxes in the cash flow. So kailangan pa rin natin siya i-compute, no, from the taxable income. So there. For public projects, no, the analysis of before tax cash flow is sufficient because these projects are not taxed anyway. For private projects and investments, no, we should use the after-tax cash flow analysis. We should compare the before-tax cash flows, MARR, and the after-tax cash flows, MARR, using or rate of returns using different MARRs. Tapos ito usually ginagamit natin pang estimate, no? Mas madali siyang makita using an illustrative example. So for instance, we bought a new machine, or we're planning to buy a new machine worth 80,000 pesos. Now, what we expect to gain in buying that new machine is that tataas yung, hindi tataas, magkakaroon tayo ng savings equivalent to 36,000 pesos every year for the next 5 years. And then at the end of its useful life, meron pa tayo recoverable na 20,000. No? Tax rate is 30%. For this particular illustration, we'll use a straight line method for the depreciation computation. Let's just calculate for the before tax and after tax IRR. In this example, tignan natin, no? So 80,000 pesos yung investment cost. It's a cash flow, diba? The savings that we gain would be 36,000 pesos every year from years 1 to 5, and then the salvage value is 20,000 pesos. So simple lang for the before tax cash flows, isa-sum lang natin yung tatlong elements na yon. So that's the before tax cash flow. And I trust because you already did the previous modules that we can already calculate the IRR for the before tax cash flow. Diba? Kasi meron ka ng cash flow elements dyan. So the cash flow before tax, or the IRR before tax, is 37.87%. Now, from the before tax cash flow, para ma-compute natin yung after tax cash flow, we need info on the depreciation cost. Sabi natin, ang gagamitin natin is a straight line method. No? So basically, nako-compute natin depreciation cost by deducting the salvage value from the initial cost. So 80,000 minus 20,000, that's 60,000. We divide that by 5 years kasi 5 years yung useful life. So that's 12,000 pesos every year. So considering that, walang sinabing ibang cost, no? Walang sinabing ibang yearly cost. So the taxable income is 24,000. And for year 5 kasi meron tayong proceeds from the salvage value. Taxable income for year 5 is 44,000. If we calculate the tax, so that's just basically 30% of the previous row. And then the net income would just be the taxable income minus tax, no? So yun. And then in computing for the after-tax cash flow, actually ang kailangan lang natin would be the before-tax cash flow minus the tax kasi hindi natin kailangan idagdag si depreciation cost, no? So kaya kunyari for year 1, we have 36,000 minus 7,200. So we end up with 28,800. All right, so that's our after-tax cash flow. And if we compute for the IRR of that cash flow, we get 26.18%. Diba? So that's how we analyze using before tax and after tax calculations. Okay, so I believe that's my last slide. So I think we're all ready for the breakout